Hi, good morning everyone. My name is Ram Dhamija. Welcome to my channel. Today is 18th of May and it has been very interesting last week wherein we have seen on one hand 4% up move, almost 4% up move on one day, and then followed by some consolidation, and then a very violent Nifty expiry to a very calm Friday. So it has been all over the place in the last 1 week, but the good thing is that the markets are on a roll in terms of going up. It looks like the markets can't go down from here, and this is typically what happens, when markets are in up move and in a bull cycle, that it looks like a bear market is not possible. And when it just turn back the clock just 2 months back, and you will feel that a bear market was always on. That was the time when no one thought the bull market is possible. So this is how markets are. I remember still on 7th of April when the tariffs were announced and the markets had gone down, there was just no hope left, and everyone thought that capitulation is here. Small caps were down 5%, Nifty was down minus 16% from the peak, and it was a mayhem that was happening. And turn the clock now, just been couple of months, not even couple of months, and it looks like we are very near to our all-time high. So how things change in the market, and that is why it is very important to stay invested in the market, stay invested by your systems, not get swayed by the noise that is coming in, because there will be noise on both sides. When the going is good, then you will hear only good news, and when the going is bad, then you will not hear any good news, and it looks like the world is going to come to an end. So during those times, it is very important to stick to your system and stick to what you are good at, what you have thought, what you have back tested in terms of investment approach, in terms of your trading approach. And you kind of talk to yourself and say that yes, I believe in the numbers that I have tested before, and I'm going to stick to it no matter what. So the news flow can't sway me away. Only if you do that will you be able to emerge stronger, and only if you do that will you be able to invest. Otherwise, you will get swayed away by the market, because each news flow looks like it's the end of the world when the going is bad, and each news flow looks like it induces a fear of missing out when the going is good. So that was one thing that I wanted to discuss. Another thing that happened this week was that we had a very violent Nifty expiry on Thursday, the kind of one that has not been seen for many months. And during such days, so I remember, I think the Nifty straddled opened at about 150 odd something, and Nifty moved almost 1,000 point that day, up and down movement if you consider. So anyone who was selling options got fried that day. It was just not possible, and it has been a very rough month for option selling for last I would say 1.5 months. And if you don't really have very strong systems in place, again you will be thrown out of option selling. In fact, Thursday was such a day when no option seller would have made any money. The only way to make money was to buy options, and if your systems had a buy option in it, then only you could have made money. So I had in my system, in fact, I am also changing my systems a bit now, but in my system I had a limited quantity of buy, which was not sufficient to cover the entire drawdown that happened because of the option selling that day. But it ensured that I got a good cushion, because there were calls that I had at uh, 24,950 if I'm not wrong. So they became in the money, and they cushioned the loss to a certain extent. But having said that, the point is that you have to have buy and sell systems both if you're selling options, because on such days it's just not possible to manage with one. And then come Friday, everything changed again. So it was a pure, simple, nice decay that happened on Friday. So again, if you did not have the systems in place, you will never come back on Friday to sell options. And if you did not have systems in place, you will never buy on April 7th. And if you do not have systems in place, then you will have a fear of missing out, or like what happened on Monday when Nifty went from 24,000 to 25,000 in just one day. So all this basically comes to how you are going about your investing, how you're going about your trading, and if you're following a system or not. And if you follow a system, then I think it's much more easier. So having said that, I will take you through where we are and how Nifty and the markets look for next week. What should you do? Where should you invest? And so on. So let's begin. So this is the Nifty chart. that we had been discussing, and this was the low that we had made on April 7th. So from there, as you can see, it has been just a one-way rally, and these lines were some sort of resistances that were there on the way up, while on the way down they were supports. So now we have crossed a critical level of 24,800 odd, and we are now trading above that. So it is a good news, and the next one logically is the all-time high after this. So if we are able to maintain our composure over these levels, then I think it's just a matter of time before 26,290 odd is broken. Now, you know, on April 7th it looked like we are so much away from all-time highs. It's going to take a couple of years to break all-time highs. Forget about clearing all-time highs. This was the narrative that is going on. And look at it, in 1 month we are just 4% away, we're just down 4% from the top, from the all-time high. Bank Nifty has already taken out its all-time high. So this is how things change. This is how narratives change. You can see these kind of huge gaps that happened. One gap happened on 15th of April, the other gap happened on that Monday, 12th of May, when the ceasefire news came out. And then just look at this, I mean, we are almost nearing all-time high. So this is how things change. And equally bad, you know, when the markets have to correct, you can see over here, you know, from 5th of February, we just corrected to 4th of March, and from 4th of March to 25th of March, it was just wild one-way rally. And then from 25th March to 7th April, in such a quick succession, we broke the previous lows as well. So markets will be highly volatile, and it is the nature of the markets. It is how you play these markets is that will make a difference. So Nifty, as I said, is looks fine as of now. Only one point of concern that I will share is that the open interest is negative, and there's one bad news that's come from US. So let's see how the markets react to that. Now let's look at Bank Nifty. Bank Nifty is all set to again break its all-time high. It already broke its all-time high on 23rd of April, right? Because from 7th April it never made a low. In fact, its last low was made on 12th of March. So that basically shows the strength in banking, and it broke the all-time high, and it closed at 56,000. From there it corrected a bit, but it looks like 56,000 is just a matter of time. Any day it can go. So Bank Nifty is making higher highs, higher lows, and it looks like it's got tremendous strength in it. So all the banking names are also doing good. So Bank Nifty is, and I've been maintaining this, you know, that financials probably are the next leaders of the next bull run. It's quite possible because of the strength that they have shown in the bear market, and they were the first ones off the block. So let's see how it plays out. But if there is some good news that come on the banking sector, then the banking and financials can possibly lead the next leg of the bull market. Now coming to how the indices are placed from their 52-week highs. Bank Nifty, as I said, is just 1% away. It's just a matter of intraday. It will take it out any day. Fin Nifty is 1.28. Private banks is in the same league. Nifty, as I said, is just now less than 5%. We have been tracking Nifty since, you know, -16, -12, -10, -8. Now it's gone below -5 from the all-time high. So we are nearing the all-time highs as we speak. Mid-cap again, surprise, -6%, which is like huge rally that has come in mid-cap. Mid-cap had gone to -25% odd. Infrastructure is making a comeback. Pharma is making a comeback. Pharma is now -9 only. Pharma had gone to -22, -23, I remember. Small caps is now only 11% down from the all-time high. Now this is again some news, because small caps was about 20% down almost a week back, and from there look at the recovery that's come in. So small cap is also making a dash towards its all-time high. Nifty next is -14. And even the momentum and alpha names, which are highly volatile and high beta names, are now at the -20% kind of a range. They had gone to almost -37, 38% from the top. And in this column, basically it shows that how much upside is required to reach those all-time highs. This is from the top, and this is how much is required from the current level. So you know, there's an interesting rule that I'm sure every one of you knows, that if something falls down 20%, it has to go up 25% to be at the same level. So this is what is indicating in momentum. You know, -21, you have to go up 26%. So this also is a very powerful thing, which basically indicates that if a instrument is down, let's say -20%, -30%, -35%, then it has to go up even more to recover that loss. So it has to go up by 25% if it is down 20%, and it has to go up almost 50% if it is down 30-35%. And that is where your opportunity comes in. So if anything is down -20%, and you know that most of the things do revert to mean, especially the indices, especially the mutual funds, they do revert to the mean, then those are good times for addition. And I've consistently maintained that, and that is the thing that I share with all my clients, that whenever the panic is there on the street, that is the time to buy. And only if you put money when everyone else is panicking is when you get the rewards. So it's very, very clear. We have deployed a lot of money during the corrections, and now all my clients and myself included are very, very happy with the outcomes, because everyone's portfolio is in the green. And that just reminds me, if anyone is interested in making their mutual fund portfolio very solid, sharp, well focused, well balanced mutual fund portfolio, then they can contact me through the link given. I will help you to build a mutual fund portfolio. It's free of cost. And I can also analyze your mutual fund portfolios to let you know where the gaps are and how they can be fixed, and how can we go about it. So that is what I do professionally as well. I'm an NSM certified, AMFI registered mutual fund distributor as well. So I help clients building a very strong, robust mutual fund portfolio. So anyone who is interested in doing that, please fill up the form, and I'll get in touch with you. So this is how the all-time highs look like. So it's a good picture right now, if you ask me. Unless something unknown happens, I think we are doing all right. Now coming to the part which I was mentioning about, which is a slight niggle, so to say, is this open interest right now in Nifty. As you can see, PCR put call ratio is at 0.76. So about 13 crore calls versus 10 crore puts. Not too much, but it's slightly bearish, not very bearish, because very bearish is 0.6, 0.5 kind of a PCR. So 0.76 is slightly bearish, but it can get covered because the difference between calls and puts is not too much. So let's see how Monday, Tuesday plays out, if this gap goes up or this gap gets covered and suddenly puts are more. So this was one small niggle that I thought I'll share with you. Now coming to the premiums on the straddle. The straddle is trading at about 354, which is a good premium in my opinion, but a lot of times a lot of things change which we don't come to know. For example, on the day of expiry on Nifty, the straddle was trading at almost 200, if I'm not wrong, by 1 or 2 o'clock in the afternoon, and before that wild up move came. So you just don't know. It's not necessary that high premiums in the straddle would mean high realization, because the movements can also be wild. But straddle is a good indicator of how much risk premium is being factored in, and how much you can harvest is actually the skill of the option trader. So 354 is fine. 4 days to expiry, it is okay. Let's see where it opens and how it behaves. But as I told you that Nifty was trading at 200, on the expiry day with a couple of hours to go, and that was the, if I'm not wrong, open on 1 day before straddle premium. So on, I think, Wednesday morning it had opened at 200, and on Thursday 2 o'clock it was at 200. So you sometimes just don't know how much you'll be able to realize out of all of this, and hence it becomes very, very important also to have a daily stop loss in place. There is a maximum loss that you should your system should allow you to take on a particular day, and if that loss is hit, you should shut shop. I remember from my olden days when I was a discretionary trader completely, I would used to constantly fight with the market and try to get back the same money every day, and used to suffer some huge big blows that day. And I remember it used to take me like almost 15 days, 20 days just to recover from that one particular bad day, and the entire month is gone. So this is how you learn, this is how you develop your systems. Now my system is like, it stops me. There is no further trading. It stops immediately if a loss certain it's actually predefined, if you ask me. It's predefined, the kind of loss that I can take on one particular day, and it doesn't matter now. It's like so naturally inbuilt that if the stop loss is hitting it, I don't even think twice what to do after that, because it's that is it. I mean, I'll take some other trade which let's say if market is going up, maybe then I'll look at possibly selling put options somewhere, but might not be in the same index, might not be in the same day, might not be in the same expiry, so, and in a very small quantity. So if my system is giving me money, I take it. If my system is throwing me out that particular day, I move out. So that is how your system should be. That is how you should design your system, that on one particular day should not be able to wipe you out for 15 days, a month, and so on. One particular day loss should be maximum, it should be less than actually your maximum profit. So that is how your system should be designed, that your one max loss day should be much lesser than your max profit day. Only then you will be able to win consistently. So let's say even if you win 50% of the days and lose 50% of the days, you'll still end up at a decent profit. So and that was that about the straddle premiums. Now let's come to how the international markets are behaving. S&P VIX is down. It's at 17. Wow, that's good news. So S&P VIX had gone to 45. It's now down to 17. So that basically means US markets are also fine. US 10 years at 4.4. This is something which is worrying. It's not coming down. So US yields is something that is a worrying sign. 4.5 is not a good level to be at. And, if it's lower, then it indicates some stability. Right now it's not coming down. Nasdaq closed up, which is good. Nasdaq futures are up, but Nasdaq, I'll tell you something about the futures as well as we go along. What happened the other day? US dollar index is at 101. I think it's going to go below 100 from all indications. Brent crude is slightly up at 65. USD INR is 85.5, absolutely fine. Gold has made some sort of a comeback at 3200. It had gone much below, and silver is at 32. So all indications are okay. Bitcoin is at 103, so that's indicating a lot of liquidity in the system. Now this is one important thing that I wanted to take you. Moody's strips down US government gold standard AAA rating, cuts it to AA1. So, Moody's has reduced the rating of US sovereign from AAA to AA1. Now, typically whenever that has happened before, it's happened in I think 2011, if I'm not wrong, it happened before this, is that there is some pressure on US markets because of course rating downgrades doesn't mean that there's confidence in that particular economy's paper actually, or central government's paper over there. So that basically indicates that there might be some pressure on the dollar, there might be some pressure on the US markets going ahead, because a lot of these investment firms have mandates that they can only invest in AAA rated paper. So some of the investments go out, and it has a domino effect. So if the US markets react to it, and there was a reaction, what I was telling you about the futures, because this news came in about 16 minutes before the closing of the futures in US. So the US futures fell, but they were so much up that they could not fall completely, and the entire reaction to this news is going to come on Monday. So if the reaction is very big, then we can expect some weakness in our markets as well. But if the reaction is moderated and it is contained, then I think it should be okay. So that is another small niggle that has come in. So you just don't know, what is going to hit you from where, what kind of news comes in. So we will have to factor in all these things into our calculations as we go along. Another interesting data point that I would like to show you is, this is the performance. I had written on Twitter. This is the performance of Nifty versus small and mid cap. So you can see that the movement towards quality, this is the percentage change. So Nifty has given about 5% return since January, whereas small and mid caps had gone into huge negative, and then they're trying to make their way up. So basically this indicates that if you stick to quality, or quality rather, is performing well this year. So if you stick to quality, and if you stick to large caps, and if you stick to good growth companies, that is where you can possibly generate an alpha over. If you look at, so there are cycles to play, there will be cycles in small cap, mid cap also to play, but perhaps the time might not be right. This is what I've been maintaining, because the valuation of small and mid cap is still elevated versus large caps. Large caps were very, very decently valued some time back. Now they are also fairly valued, I would say. So sticking to large caps and quality names has helped people beat their portfolios versus the benchmark indices, because the broader indices are not performing that well, and they have performed very well. If you with the last 5 years, if you see small cap index would have at least gone 4 times and so on. So they have performed very well, and the right time perhaps to buy these were in March 20, when no one could have bought them, and March 23 also, when a lot of people did bought them, including myself. There are cycles when these indices will actually bottom out. Will March 26 be another time? I don't know, it's speculation, but the way small cap and mid caps are underperforming the Nifty indices, there will come a point in time and they will be very, very attractive. Maybe the time is not right now. So that is where your asset allocation comes into the picture. That is where you perhaps need a helping, guiding hand to tell you which asset class to invest in, which market cap to invest in, and so on and so forth. And then you can take an informed decision, and that is where I help my clients build their portfolios also. So that's it from me now. It's been I wouldn't say uneventful week. It was a quite eventful week from a market movement perspective, with so much up and down happening. And this is how markets are, frankly, if you ask me. So let's see what is in store for the next week. I've shared my thoughts over there. If you like my content, do subscribe to the channel, do share it with your friends and family, and I shall see you with another update. And thank you for watching. Take care. Bye bye.